Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Monday, June 27th. It is 6:33 a.m. as I'm starting the video. Quick look at futures. Oil's pretty much flat. We are green on equities, about 0.5% across the board. Gold's up a little bit. Over on the macro front, we've got durable goods orders, pending home sales, and a bigger one this week will be Wednesday, where we get GDP and Jerome Powell speaking before the market opens. And don't forget, on that GDP number, we put out a negative print on Q1. So, you know, if Q2 turns out to be negative, I think that's the technical definition of a recession. So that recession call may be coming sooner than later. Earnings front, the only thing I saw of any consequence after the bell today is Nike. So if you want to get involved in that one, be my guest. I think earnings season truly kicks off, I believe it's next week, possibly the week after, but we're kind of in an information void at the moment. Not a lot of earnings going on. Fed just had their announcement. Got a holiday coming up next Monday, so we'll have another 3-day weekend. So let's dive into the charts. What I want to do today, in a somewhat departure from normal, I want to hit all the daily charts on the FATMAAN names as some key levels come into play, possibly today or tomorrow, and then also the 60-minute charts of the indexes and FATMAAN names as well to get you set up for the week. Looking at Bitcoin, kind of just oscillating here in the middle of the range. If you're actively trading that, I think you can be long above 22,000, where it's been shown to have some resistance there, and your first target would be 24,000. Moving on to the oscillators, we bottomed out. Now we're racing towards the top, up towards 35 on the NYSE, at 42 on the NASDAQ, so we're heading up towards the top of the range. In this little rally we've had, NASDAQ percent above 50 has gone from, let's call it 6 up to 32, so that's heading in the right direction. NYSE above 50, bottomed out at 9.3 up to 25. Moving on to daily SPY. I think this rally can push higher through the end of the week. I mean, I don't want to go beyond that. I'm long. I want to stay long during this little period here, even if we have a wobble today. I think there's a good chance we can drive higher into the 4th of July weekend. If we look at SPY, there was a gap in here that we closed on Friday, and so in that process, we had a positive technical event. Whenever you fill a gap from below, that's positive. We also recaptured the 20 here in blue, so that's a positive technical event as well. Now, as we look overhead, we've got a good sized gap here from 395.7, let's call it 396 to 401. That's $5 gap. I think that would be a nice technical check mark if the market can do it. What I want you to pick up on is the downtrend, downtrend line on SPY, because when we jump over to the daily chart, that won't be quite as evident. So you're going to want to pay attention to that. Notice also, it's kind of a little hard to see, but the falling 50-day comes right in at the top of the gap fill. So if we were to make it to 401.50, you're going to have a triple layer of resistance there. What are they? Top of the gap, number 1. Declining 50, number 2. Daily downtrend line, number 3. If I was in, basically I am long, and we get a $10 move in short order from 390 to 400, I would definitely be hyper aware of that level as far as your holdings. You may want to take it off or take them off depending on what you got, and then wait for confirmation that we broke out. So I wouldn't be surprised if there was a pullback off of the 50, off of the daily, and on that gap fill, and then there's a chance to break out on the second try, and then our big overhead resistance, should SPY break out, we'll be back to this main level here between 410 and 415 that price was unable to take out back in this period. Now when we go to the 60-minute chart, you can see that I've taken out the gap that was here. That's been filled. And on the open on Friday, we created this gap below. So up above, here is the gap that has yet to be filled. And then here's our big resistance area between 410 and 414 on the 60-minute chart. So I think today you can use that 390 as a pivot with some overhead resistance at 392, 395. Why? Top of this higher volume over price bar, and then we've got the gap beginning at 395.70. As we move to the Qs, you can see that this gap and the downtrend line on the daily come in much earlier than what am I trying to say? As its counterpart on SPY. We're almost there. So at 299, that is where I would say you'd have a double layer of resistance, top of the gap, downtrend line. But if the Qs are able to power above 295, then you've got the declining 50 at 304, and then you've got a gap above, and then you've got this big area at 317 to 322 that we've had highlighted for a long time. And here on the 1 hour chart, you got some nice resolution on it. We had a new gap form Friday morning, which I've marked. We have the overhead gap above, and remember, it doesn't look like a whole lot on the chart, but it's almost $5 wide. So you certainly want to, if you're an active trader and you're interested in it, have those levels marked for potential gap fill. on the cues. You can tell that PPO momentum and RSI are remaining strong. As always, doesn't matter what you're charting, draw yourself some trend lines on your indicators. And a time to be concerned or to get on your toes and be ready is if, RSI were to break trend and start rolling over. Same thing on momentum. You get a bear cross up here with it starting to roll over. You'd probably see price pulling back. So as you're looking at your charts, stay attuned to the price action, yes, but also keep an eye on your indicators for an early heads up if the rally sputters or starts falling apart. Moving on to IWM. Daily chart. We put in the divergent low, lower low on price, higher low on momentum, higher low on RSI. We're right on the doorstep of this gap that runs from 175 to 178.50. That's a nice $3.50 gap. I'd like to see you participate in that. Notice that it stopped on a dime at dual resistance, the bottom of the gap, and the declining 20-day. Above that lies the declining 50, which you can see here almost lines up perfectly with the bottom of the next gap. Notice on this chart as well, I've got a minor downtrend line off of the most recent high coming down that comes in right in this gap area. And if price is able to take out the 50, fill this gap, and then break above this downtrend line, then I think you've got a chance to come up here to this 187.50 and possibly even up to 191, where it hits a more important level, which is the major downtrend line on IWM. Zooming down to the 60-minute chart, here's our new gap. Here's our pre-existing gap. And in black, I've dropped in the fib retracement levels. You can see here that this 176.50 is going to be a big level. Why? Well, you're midway through the gap. You hit the 50% retracement level, and we're at the highest volume over price bar on this chart. So getting above 176.50 will check a lot of boxes for the bulls, because then what you can do is recalibrate your trading around this high volume over price bar, especially if we go up here and spend a little bit of time consolidating below that level. Then that level will become even more important, and then you can stay long against 176.50 and look for a gap fill and a potential run up to the bottom of the box at 181.55. Let's jump into the fat man names quickly. Meta starting to get a little something going on. Had a really nice day Friday. We talked about this trade, up 7%. First objective is the 20 EMA that comes in at 174.50. If you can get above that, got a chance to come in to this downtrend line and potentially go back up above and break out above the 50, which comes in at 189.66. You break that one, then you can get up into the low to mid 200s. Let's just call it 225 up here towards the top of this value range. When we go down to the 60-minute chart, we had a really impulsive move out of the gate, leaving this open gap behind. We went up, we filled this gap, and we closed on the highs. So really nice day. I think your pivot today is going to be right in this 170 area. If you can hold that, then the door's open for a gap fill here up towards 176. Moving on to Apple. What I wanted to point out, oh, by the way, I'm long Facebook, Meta, whatever you want to call it. I'm also long Apple. Decent day on Friday. I don't have the gap marked here. I'll show it to you on the 60-minute chart. But we've got a downtrend line off of the most recent highs. So what could happen on Apple is a gap fill here this morning and a potential pullback or a potential breakout. Up above, we've got 145 as resistance. Then you can see the declining 50. And then next level is back up at these prior important points. Resistance, support, support, resistance. So that 151 will be an important line on the chart. Zooming in on the 60-minute chart, here's the gap from Monday morning. Here's the pre-existing gap up to 142.50. And then just for a visual aid, you can see the price is working its way up the rising channel. If you're not in it and you get some kind of a pullback into the bottom of the channel, say here at 141, go up a little bit, you missed it, then it pulls back to 141, maybe mid-morning, something like that, 1 o'clock, whatever. I think you can buy it there and see if you get a run back up to the top of the rising channel. Tesla. Nice emerging setup here. Why? We had a low here at 625, marking the PPO here and the RSI here. We rallied. We came back, held 625 for a double bottom, but with bullish divergence. Higher on PPO, higher on RSI, and now also on Friday we recaptured the 8 and the 20 day. So, and we broke out of this falling wedge. So now on the upside, you've got the declining 50 coming in at 772. I think that's your first target, and then above that, potentially a run up here to the 200, which comes in at 842. 60-minute chart. We had this big pre-existing gap, and you can see the levels. We had made a run into that gap, but did not fill it. I think, depending on where we open this morning, I think you can buy. Well, if you get a pullback to 735, I would be a buyer there. If you don't get that, I think you can be a buyer at 745 and then look for a complete gap fill on Tesla up to 775. Microsoft Daily. Nice looking chart. Divergent low. Lower low in price. Bullish divergence. You got it on PPO. You did not have it on RSI. Notice that RSI came down at the same level on that second low. So you had momentum divergence, but not RSI divergence. But excuse me, on Friday, it stopped on a dime at right at the 50. And so here this morning, I think you can buy 270 on a recapture. Let's look at the 60-minute chart. I think you can use 267 as your pivot this morning if things are a little bit weak. But if that doesn't happen, I think you can buy 270 for 274 as a target. Amazon. Setting up in that classic double bottom W formation. Left side, middle of the W, and now trying to break out above lateral resistance and the downtrend line at 115. I think 115 is your pivot. We closed at 116.50, so we're a little bit above it. Your first target above is going to be the 50 at 121.26, and then your second target is at 126. And then, not a prediction, I'm just explaining the chart, a break above 126 would trigger this double bottom low projection. And if you wanted a measured move, you take the lows, you take the high of the W. So let's call this 102 to 126. That's $24. You add $24 onto 126 and you get 140. And so that lines up real well technically with prior lows. We had spike lows, but you can see a lot of bars closed right on this 140 line. So I think that's going to be an important level if we do in fact rally this week. I just wanted to show you a 60-minute chart. Very much like Apple and some of the others. Nice, well-defined uptrend line on the 60-minute chart. We had a pre-existing gap that filled, and now we're up here around 117. My first target is 120 with this is where the 50 EMA comes in to play. And so, you know, if you're in it, which I am, you'll have to gauge your time versus what you see in the charts. For instance, if you've been long from lower levels and you come up here to 120, 121 and the thing just dies, you know, at technical resistance, what you can do there is just take off your position, go into price has to prove it mode, and then say price has to prove that it can recapture technical resistance at 121 the recapture of the 50. Then you can get long and see if you don't get a move up to 125, 126. That would be my first target when and if price took out the daily 50 at 121. Google, you can see that it's not a perfect double bottom, but pretty darn close. The W formation, and this formation is just about to trigger on a break of yesterday's high or Friday's high right here at 23.59, just rounded off to 23.60. You break above that, then I think you got a shot to get all the way up to this 25.20 area. Big void in the charts. That would be a good one to alarm, because you got some running room there up to all these lows. I think that would be a nice trade if you can catch it. You can see here that was technical resistance back here. You can see that above this 23.60 area, 23.65, the volume over price resistance really backs off, leaving an open door for this gap fill up above. Netflix has kind of an interesting chart shaping up. Double bottom at the bottom of the box, right? Bullish divergence. Second low at a much higher level on momentum, and higher level on RSI. So those are positive developments. Now here at the midpoint, roughly speaking, the 2/3 point on the chart, we recaptured the 8 and the 20, both positive technical events. You break higher above yesterday or Friday's close, you can get a run towards the top of the box at 205. Then you get a breakout there. Then you've got a measured move target back up towards 245, where the initial breakdown happened, with some potential resistance at the falling 50 EMA that comes in at 220. So Netflix is starting to shape up. Semis on the daily did not have, well, it was up 4%, which ain't all bad. But you can see we're in a pronounced downtrend on the daily chart. I think your first resistance above 215 is going to be the midpoint of this channel that comes in line with a level that we've been watching for a while at 223. If you can break above 223, I think you can find 235 at the top of the channel, and then that would be a really, really big level. Looking at the 60-minute chart, left a gap behind, which I've marked. For all intents and purposes, this gap is, I mean, it fell a little bit shy, but I think that's going to fill. And then you've got the bottom of this prior gap at 220, and then a $4 gap fill line up above that 220. This is where that 223 line comes into play. You get a breakout above 224, then that's where you could see price get up into the low 230s, 233, then 236, lining up with the volume over price bars and the prior price action. If the NASDAQ is going up and the market is constructive, your ARK names are most likely going to outperform. Up 4% on Friday. Another double bottom setup. Lows, lows, positive divergence on both RSI and PPO. I think if you get above 118.50, you can be long, just knowing that you got the declining 50 coming in line here at 1970. Get above that, I think you can easily see 23, which was resistance back here and support back here. So that is ARKF has been shaping up. Here you can see the price action. Here's the gap from Friday that I have marked, and you can see here at 1790 we had a reach for support here, we had support here, and we had support back here. So if you're not in it and you get a chance, I think you can buy 1790 for ARKF to make a potential run up towards 1940 and actually beyond if it can take out that level. ARKK, same thing, double bottom low, bullish divergence. Measured move target is the height of the W added to the breakout. So here I've got a 25% move. Doesn't look like that much, but it is. So we're actually just trying to break out now, but that measured move target takes you up towards 57.50 on ARK, and that would mean at least two things. Number one, you will have reclaimed the 50, which is a technical plus. You will have broken out from the downtrend line, which is a technical plus, and you will have taken out at 52.50 the prior low. Support, resistance, support here. So you get above 52.50, I think you can see 57, 50, 58, something like that. And then a break above there, get a run to the 200 up at 70. So if things progress nicely this week, that could be a really nice trade. Let's just talk about, give a little bit of a recap. We're heading into a holiday week. There's going to be a lot of rebalancing flows centered around June 30th, which is, what is that? Thursday? 27, 28, 29. Yeah, Thursday. I think that'll be positive. Usually weeks heading up to 4th of July, usually positive. I think that GDP print and Jay Powell comments on Wednesday will be huge. I think we have a chance to extend this rally at least into midweek, where we've got Powell and the GDP print. So unless something dramatic happens between now and then, I want to try and keep pressing longs and see if we can get this rally to extend, and then take it from there. And what I've been doing, and I pass this along as often as I can, but I've been quickly going to the bank on things that have been working, because I don't trust bear market rallies. You cannot put a ton of faith in. They're reflexive. They can be short-lived. They can go farther than you think they can. So that's why, you know, when XBI goes into the money for, you know, gets $1, $1.50, $2 into the money, I'm rolling up. XLV, I'm rolling up. Really anything that I'm in that goes into the money quickly, I'm trying to roll up to the next level, because whether it's GDP or something Powell says, or the market just runs out of gas, I want to be at the money. I don't want to be deep in the money, because that would hurt a lot more on a quick down move than, you know, being at the money, higher delta, etc. So I want to stay long. I want to see if this rally can extend this week, and then we will take it from there. If you're new to the channel, thank you for spending some time with me this morning. If you appreciate the analysis and you like getting objective trading levels each and every day, please hit the subscribe button, the alarm bell. Jump over in the show notes. You'll find a link to add your email address to our list, and that way, morning, noon, or night, you'll get all my content, whether it be on YouTube or a midday market note or a trade idea, anything like that. You'll get it right in your email box. The rest of you, thank you so much for supporting me. I really, really appreciate it. Let's see how this thing goes, and I will be talking to you next time. This has been Chris Buss with Traders Profit Compass. Have a good trading day.